Here on the Transparent FX Academy, every day I give you my best market breakdowns to identify the best trading opportunities in the Forex market. So without further ado, let's jump straight to the charts and see which is today's Forex pair. In today's video, I want to speak about GBPUSD. Now, why do I want to speak about GBPUSD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from the higher time frames, then going down on the lower ones. We will also check what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that at the moment, it seems like we have failed in continuing lower. In fact, the market started creating this move to the downside, and there was definitely the possibility for the market to go and test this previous resistance turned support here. However, we can see how last month, the last week of last month, the market rejected to the upside these prices, and currently we have already seen the start of the new month, which is currently bullish. So basically what is happening is that the market is rejecting this previous monthly demand from which the market had created this move to the upside, which is now again demand here and currently respected as demand. So from here we can expect more continuation to the upside to follow. Going down on the weekly time frame, what do we see? Now here in the weekly time frame, we can see that once again, the market failed in continuing lower after it tested this strong demand. In fact, we can see how the market in the past tested these levels with this candle here, a candle with a very long wick showing rejection of these prices. And when the market melted inside of this zone again, we can see how we just rejected the zone to the upside, creating this double bottom. So monthly and weekly both seem quite bullish, and we can expect the market at least to go and test the structure that we have at this level. In fact, this is the first strong supply zone that the market needs to test before it can potentially continue higher or get rejected to the downside. But anyway, we have a lot of liquidity inside of this zone, which is obviously supply, that we do expect the market to test. Just a quick thing, make sure that you leave a like and subscribe to the channel, and also let me know in the comments the topic for the next video that you will like. Going down on the daily time frame, what do we see? Now here in the daily time frame, we can see how we have just broken above a quite important structure level. In fact, we can see how the market here on the daily time frame was finding resistance in multiple occasions at this level. And since the market has now broken above this resistance, as you know, in the market, previous resistance, once it is broken to the upside, is turned support. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that we have at 0.382, 50% and 0.618 Fibonacci retracements, all lining up at this area that we do expect the market to test before a potential rejection to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds, so the non-commercials in the market are doing, we can see how lately net positions have been actually dropping. In fact, we just reached minus 16.7k net positions, which means that overall on the pound, at least at the moment, we don't see any longing. So a correction to this strong demand and support is quite likely. And if the market will reach this area and inside of here, we will see proper bullish price action at that point, we should also see longs added from an institutional perspective and shorts getting closed. So basically, we should see net positions getting increased with the last report if we actually get bullish price action when the market will reach this area. So the way in which we will be approaching this with students is as usual being reactive and not predictive. If the market will reach this strong demand and support zone, inside of here with students, what we will be doing is monitoring price action from a 4-hour perspective and lower, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding GBPUSD to our watch list. And as soon as the market will provide to us one of our valid entries, at that point, we will be looking for this potential long with a good risk to reward for the continuation to the upside and the completion of this impulse correction and impulse pattern to the upside. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. Every day you get the new daily market breakdown showing you how to apply the strategies with the entry stops and take profits. And you can also ask questions and get the answer the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.